It is Friday, September 19th, and we just concluded another very bullish week in the stock market. So let's talk about the bullish and the bearish scenarios going into the end of the year. Let's break it down. The bullish scenario has played out so far, and that is that the Fed is cutting rates and they're expected to continue easing going into the end of the year with one or two rate cuts still to come. Remember, rate cuts support stock evaluations because it's cheaper borrowing, more money goes across the spectrum, and companies like BlackRock are still risk on with their investments. Number two, with the bullish scenario, is AI and semiconductors. This still remains a structural driver, especially in the Mag 7, and is continuing to carry things up because with AI adoption, earnings and everything else are expected to go up, and it's supposed to create more revenue for everybody. On the bearish side of the argument, there's two main arguments. One is a slower job market. Maybe the Fed is not cutting in time in regards to the job market. Maybe it drops too fast. The other thing is sticky inflation. If we have a job market that's slowing while inflation remains sticky and is hard to bring down, that is a bad scenario. The other bearish argument is that there's still high evaluations and some bubble risk. The CAPE ratio is around 37.5. It's the third highest it's ever been, and this measures PE ratios on stocks. That's price to earnings. Last time it was close to 40 plus was 2000 in the tech bubble. And so there is some bubble risk there because we're already pretty extended on all-time highs. And some of these companies are trading 100, 200x PE ratios. Don't get too lost in convictions, especially if you're shorting the market. There's an unbelievable amount of money there, and the market can remain illogical a lot longer than you can remain liquid. That's something one of my mentors told me way back in the day, and it sticks with me. If you're a long-term investor, all you have to do is sit back and DCA into diversified index funds. And if you're a day trader, you need to keep it light, keep it tight. Anyways, guys, I am not a financial advisor. I'm just a crazy entrepreneur who has been involved in the stock market and the housing market for the last 10 years. I hope this helps. Make sure to follow, like, subscribe, leave a comment if you have any questions. I love you guys. Bye.